in October of 2023, the average mortgage rate wasn't 7% like it was in January of 25. It was 7.79, almost 8%. Now, again, that was a number published by Freddie Mac back at that time, October of 23. So in reality, if you go back to that period of time, a little over 2 years ago to now, we've actually had about a 2% reduction in mortgage rates. Certainly, if you look at the rates we're offering compared to 7.79. And so one of the things I did when I looked at these numbers, I took a $500,000 loan amount and I calculated what would the payment be at 7.79. Oh, actually, I used a 7 7/8 rate, 7.875 rate on a $500,000 loan amount. The principal and interest was over $3,600 a month, about $3,650. Then I calculated what's the P&I payment, the principal and interest payment for the same $500,000 loan amount at a 5 7/8 rate. Well, it was about $2,950. That's $700 a month lower than what it was in October of 23. Well, I don't know about you, that's a big, big savings over just a little over 2 years ago when everybody was wringing their hands that we were heading to 8% or higher. So that didn't pan out. And in fact, we've been on a pretty extended period of time of rates gradually getting lower over this past about 2 years and 4 or 5 months. So I would hope that would give you some help in realizing that things are really not quite as bad as the media and the headlines and all that tend to make things out to be. Mortgage rates have been falling. Now, yeah, we've kind of stabilized in this, high fives, about 6% range, but there's still an expectation we're going to get a little bit better in the next year or two. So as a consequence, that's the first point. Understand that mortgage rates have improved and quite a bit improved over what they were a couple of years ago.